Have you ever thought about how different NASDAQ funds have performed over the past 10 years? Today, we dive into the world of index funds, particularly the Fidelity NASDAQ Composite Index Fund, FNCMX. Index funds, like FNCMX, have become increasingly popular. They offer investors exposure to a broad range of securities, mirroring the performance of a specific index. In this case, the NASDAQ Composite Index. This approach allows for a diversified investment portfolio managed with the goal of matching rather than outperforming the index. With this backdrop, how does FNCMX stack up against its competitors? Let's find out. Stay tuned to the end when we dive into FNCMX and how it has performed. Investors often compare funds to make informed decisions. Let's look at FNCMX and its peers, FXAIX, QQQ, and FSELX as common benchmarks. Starting with FXAIX, this fund is known for its remarkably low expense ratio of just 0.015%. With a starting balance of $10,000, it grew to $30,470. Its annualized return, or compound annual growth rate, stands at 12.56%. This indicates stable growth, albeit with moderate volatility, as reflected in a standard deviation of 15.66%. The best year saw a gain of 31.47%, while the worst year experienced a decline of 18.13%. These figures suggest a relatively stable investment option with modest fees. Next, let's consider QQQ. This fund offers higher returns but also comes with higher volatility. From an initial $10,000, the balance surged to $46,960. The annualized return here is an impressive 17.85%. However, it also has a higher standard deviation of 18.95%, indicating greater fluctuations in value. This fund experienced a phenomenal best year with a 54.85% gain and a stark worst year with a 32.58% loss. Its net expense ratio is 0.2%, reasonable given the returns. Turning to FXAIX, this fund stands out for its exceptional growth. The end balance was a staggering $96,291 from the same $10,000 starting point. It boasts the highest CAGR among the group at 27.19%, but also the highest volatility, with a standard deviation of 28.34%. The expense ratio here is higher at 0.64%, yet it might be justified by the substantial returns and the highest Sortino Ratio of 1.58. Lastly, FNCMX offers a balanced approach. From $10,000, it grew to $38,514, with a CAGR of 15.4%. The standard deviation and maximum drawdown are closely aligned with QQQ, indicating similar risk levels, but with a lower expense ratio of 0.29%. Understanding these numbers helps in assessing which fund might align best with your risk tolerance and investment goals. Now, let's zoom into the Fidelity NASDAQ Composite Index Fund in more detail. When exploring the world of investment funds, the net expense ratio is a crucial figure to consider, as it directly affects the net return on your investments. The Fidelity NASDAQ Composite Index Fund, or FNCMX, comes with a net expense ratio of 0.29%. While not the lowest on the market, this rate is competitive, especially when considering the type of exposure it offers to the tech-heavy NASDAQ Composite Index. Turning our attention to the fund's performance metrics, FNCMX shows a commendable compound annual growth rate, or CAGR, of 15.4%. This figure is a vital indicator of the fund's ability to grow investment value over time. Additionally, the standard deviation, sitting at 18.56%, suggests a moderate level of risk compared to other tech-focused funds. It's also worth noting the maximum drawdown, which is recorded at -32.39%. This represents the largest drop from peak to trough before a new peak is achieved, indicating the potential risk of investment during adverse market conditions. A significant aspect of FNCMX's appeal lies in its top holdings, which are predominantly giants in the technology sector. For instance, Microsoft Corp and Apple Inc. alone constitute over 20% of the fund's portfolio, with shares at 11.39% and 10.35% respectively. These companies are known not only for their size, but also for their innovation and market influence, which can drive significant growth within the fund. Other major holdings include Nvidia Corp, Amazon.com Inc., and Alphabet Inc., all of which are pivotal players in the tech industry. With 3,194 holdings as of the end of April 2024, FNCMX offers a broad exposure to the NASDAQ, making it a potent choice for investors looking to tap into the technology sector. FNCMX offers a blend of robust tech holdings and reasonable costs. But how does it truly stand in the realm of similar funds? Investing is about strategy, not just picking funds. Let's consider some alternatives. For investors who are intrigued by the performance of the QQQ, but are wary of its higher expense ratio, there are compelling options available. Fidelity's Technology Fund, known as FTC, and Vanguard's Technology ETF, VGT, both offer robust returns with expense ratios significantly lower than QQQ, only 0.08% and 0.1% respectively. This strategic shift could result in substantial cost savings while maintaining a high return potential. On another note, for those who find the volatility profile of FXAIX appropriate, but are looking for more cost-effective alternatives, SMH stands out. It mirrors the volatility levels of FXAIX, but comes at a lower expense, thereby offering a similar risk profile with better cost efficiency. The key takeaway here is the importance of aligning your fund choices with your personal financial goals and risk tolerance. Each fund carries its own set of risks and opportunities, and understanding these can help tailor your investment strategy to better meet your long-term financial objectives. Choosing the right fund could mean balancing between cost efficiency and potential returns. Always align your choices with your long-term financial aspirations. Purchase, subscribe, and comment for more videos on what funds you're interested in.